May 30th, 2023. Charts continue to battle back and forth, up and down. What's going to happen as we go into June? Well, I've got an idea. Let's talk about it, shall we? 786 Assassins. Thank you all for tuning in. Carolina Keith, Professor Keith, regular Keith. Any Keith is fine with me, so long as you're here hanging out. Got some cool charts to show you. Been monitoring Bitcoin, the dollar index, and some other things very closely. We got some government news to talk about. Not really my favorite thing to discuss, but I think it's important nonetheless. Let's get into it. But first, if you haven't done so, please check out our Discord. Right here is the link. Can't mess that up. Simply click it. It's also in the description of the video. What do you get? Well, you get first-hand, one-on-one, constant talk with some of the biggest, smartest brains in the community. I've personally talked to almost everybody in our Discord. I'm in there constantly. I'm here to help everyone learn. It's half off. It's a whopping one venti coffee a month at $8. Come on, man. What are you really wasting here? Exactly. First up, total market cap. This thing did a 50% retrace from its high point here at 1.26 trillion back down to around 1.04 trillion. I honestly thought this would go all the way to $1 trillion even. Didn't quite make it. It managed to hang on here and reverse just above where I thought it would. Hey, par for the course. Nothing's perfect. You know what I mean? What are you going to do about it? You can't complain about it. So I waited a couple days here for this one once it did this move. All right. As you see, once it broke back over this 382 line and started to jump into a new range here after it escaped this range that it's currently, that it was currently in right here. Once it escaped this range, I knew it was time to move on. So I went ahead and waited for this to come out. Whenever I saw this large candle start to go up, I went ahead and bought back in. I bought in roughly 60%. Mostly Bitcoin and Ethereum. I bought a couple alts, little small amounts. I didn't buy crazy amounts of alts because honestly, I just don't trust them at this point. I trust more on the side of Bitcoin and Ethereum than I will on alts until I see like a well-defined, clear-cut, let's go signal. And we'll get into that in a moment. But what I wanted you to see was first the Fibonacci retracement and the way it kind of bounced off the 50 Fib. Now, my word of caution, this is the 4-hour chart. Same thing, total market cap. What you're going to find here is this thing isn't quite getting up and going as fast as you may think it is. Smacking this trend line like this with a double rejection on the 4-hour. 1, 2. Can't really miss that, right? You got this bearish engulfing candle forming in right here. This red candle that you see on the backside here forming out. That's bearish engulfing. We'll see what the next 4-hour candle holds. Right now it's 11 o'clock in the afternoon or in the morning. We do have a clear short-term uptrend. Can't deny that. Here for that. All right. I like to make the uptrend lines green. Up for green, red for down, right? That's still holding off pretty well. I'm a little thought process of this thing's going to hesitate, stumble and fumble into June. Usually we get a pretty good wick on charts when we get into the next start of a month. And that's literally tomorrow. All right. Tomorrow's 31st. We got 2 days technically. Tomorrow's 31st and one more day after that. We're probably going to see some wonky price action here. And that's probably par for the course. Here's a weekly look. As you see, it appears as though we've tried to crack that little high that we had right here with a new one. Haven't quite done it just yet. You could argue that it did or did not jump over the trend line. I'm going to say it doesn't at the moment just for the sake of saying that. But you cannot deny this clear-cut uptrend that we got going on since the beginning of the year, which is very good. What do I see this going in June? Well, that's what we need to talk about. All right, we kind of anticipated the government doing what they did, which was essentially deciding to print more money to pay more bills, to swipe the credit card more. They raised the debt ceiling again. Rather than cut spending and decide to pay down their debt, they just continue to get more debt, swipe the credit card more. And in order to swipe the credit card more, you have to have money to pay for that. Well, where do they get the money from that? They either, 1, raise taxes, or 2, print money. Well, they haven't raised taxes. They're just going to print more money. Now, the interesting thing is when they print money, Usually risk assets go up because as you print money, you're putting more supply out there, which creates less demand for that particular item, and usually creates risk assets going up because now they're becoming more worth than less worth like they were before. All right. So what are risk assets? People ask me that all the time. It's really not that complicated. So people view the dollar and the euro and the pound as a non-risk asset, meaning they're supposed to kind of stay roughly a dollar all the time. Now, it's not really the case, but they're supposed to be pegged to a dollar, right? So risk assets are anything that may or may not go rapidly up or rapidly down in value. You're taking a risk when you buy it, right? So it's pretty much any investment. You're taking a risk when you buy it on whether it's going to go up or whether it's going to go down. That makes it a risk asset. That goes for commodities, stocks, bonds, equities, crypto, anything you can think of that you buy as an investment to make it go up in value, property, real estate, cars, clothes, designer purses, doesn't matter. Usually those risk assets go up in value. Now, how long is this going to take? Well, that's the beautiful thing here. I'm going to show you the cycle next and show you what happens when the government does what they do here and what we already had planned out and we already thought may happen. Now, I'm going to use some Fibonacci-based time zones here to show you the cycle from the peak to the next halving, how long that'll take, how much money is going to come in. This is very basic stuff, all right? I'm not going to get super deep on this, but I'm going to grab the peak of the market roughly in November 2021, and I'm going to pull this down just like it's a normal trend line, right? And you can see the dotted trend line form up right here. It's kind of following the trend that we broke back in January. All right, what this shows us is how long this cycle's got to do a move and how long it doesn't have to do a move, when the right time to buy, when the wrong time to buy is, and how long these cycles are going to last. If I just pull this trend line here to, or if I just pull this fib set through to this trend line to where we're at now, you kind of see we're starting to end off here roughly around the one line. That's happened in the past before. And this tells you that roughly October, November, and April are the areas of your last chance to get in for a fairly cheap price. Now, what fairly cheap price is that? Doesn't really matter at this point. What I'm looking for is a time. By the government deciding to print money like they did, well, they essentially kicked the can down the road. If I pull this fib set out to April of 2024, that green dotted line that you see just there, that's the next halvening date. Now, I've shown this before, but if I pull from the previous peak to the halvenings of every single cycle before now, what you'll see is usually these fib time zones end out at roughly the same time and show us roughly what's going to happen. So I'll do that now. I'll go out to April, the dotted green line there. It's still from the peak back here to the dotted green line. And I pulled it from the bottom down here. Okay, fair enough? Fair enough. So what this tells us is the red lines here are where we probably should stop. All right, I'm getting December 24. Well, that doesn't seem realistic to me based on having. April 25, not bad. And then the big one, the 1618, which is where you should absolutely think about stopping, October, November 2025. Well, that's about 2 years from where we are now. Right about when the time is that the government decided to start printing more money for at least the next 2 years. Now, how much are they going to print? Anywhere between 2 to 4 billion, 2 to 4 trillion. I'm sorry. That's going to drastically reduce the amount of value in the dollar itself, which will in turn raise the price of every single risk asset that has any ilk. Now, it's awesome to me that this just so happens to line up with the mathematical points that come with Fibonacci retracement, Fibonacci time zones. I absolutely love data, and this is why I love data so much. It works more times than it doesn't. Now, I'm going to do the same thing here with total market cap and show you a very similar look, right? April 24, that's when the halvening occurs. Where exactly, it doesn't matter. It's in April. It may move up a little bit. It may move back a little bit. Whatever. But we know it's in April of 2024. All right. And then we pull from our top. We pull to our halving line over here. And I'm going to match it with the bottom down here. All right, so the bottom of the cursor is going to be there, and I'm going to run that all the way over to April over here. And what you'll see is this tells us roughly the exact same thing, okay? October 2025 looks to be the point where we say, okay, that's enough. We got two lines here that we can kind of compare as we go along, where the market may slow down or speed back up, or maybe have a double top, or maybe even a blow off top, none of which we know exactly yet. All right. I want you to understand that I'm not trying to guess at this. What I'm seeing here is the market kind of lay itself out for me and show me that things are trying its best to recover, whether it has or not. Is the bottom for sure in? I think this is a pretty solid bottom that it formed. It's going to take something really drastic to move this thing down a long way. I kind of think that we may get a little bit more up here as well. I don't necessarily think we're done. Now that they started printing money again, I think that's a solid possibility that we get some more up through the rest of the summer. All right, last thing I want to show you here is a comparison on a daily chart of total market cap from 2015, 2019, and where we're at currently. And I'm going to drop the camera off here so you can see it a little better, but just follow the cursor here. It says current spot 2015. That's roughly the date range. All right. As you see, we had a bit of a run up here, and it retraced underneath the trend for just a bit. Then it broke loose and ran up to the 50 fib. All right. Same thing in 2019. 2019 was a little bit more aggressive early off. As you see, ran up very well, hesitated a bit, same date, same date time frame. Then it broke loose from the 50 fib and actually ran up to the 618. And here we are currently. All right. We ran up past this trend line, bounced off of it, had a bit of a downtrend right here for just a little bit. Now we have this question of whether we're going to snap through here, break the 1.25 trillion level and get up to that 1.5 trillion. People have asked me a bunch of times what I think the odds of this is. I think the odds are better than not. I think we probably got 70% odds to jump up there toward 1.5 trillion. And here's a monthly look at total market cap to kind of show you what I'm talking about. It's not that far to get to that 1.5 trillion dollar level. It's only going to take a month or two or three worth of anything to get up here to where I think we could go. And then there's precedent to say it'll do it. Back here's 2015 that I was just talking about. It through one red candle, and then look at the move it made. Just pushed right on up through like it was nothing. And the same thing could happen down here or up here. You had similar moves back here, April, May, June, July, right? Did pretty well. Then it kind of slowed down and stopped. Same story here where we're at. Broken trend. Momentum still up. I mean, no matter what indicators I pull up, they all look kind of the same. So I don't think there's any use in checking through those. More so just wanted you to see how I see it and why I come up with the numbers that I come up with. That being said, that's going to be it. I'm not going to get super deep on a whole bunch of different charts and tell you all this different stuff going into a new month like this. I want to give it a little bit of time to play out. Thank you all for watching. One more time, if you haven't done so, right here is our Discord link. It's $8 a month, next to nothing, all right? Please go hit like, comment on this and tell me what you think. Subscribe while you're here. Hit the little notification bell so you never miss anything. I'll leave you with this. In the words of the late, great, Notorious B.I.G., you could have been anywhere in the world. You chose to be here with me. I appreciate that. Thank you. See you guys on Thursday on the live stream, 11 p.m. Be good. Sky's the limit. Peace.